To keep you updated on the capital and financial markets, here is a recap of what happened.
FIMM has issued public reprimands against 5 former unit trust consultants for breaching its consolidated rules. The action underscores FIMM's commitment to enforcing compliance and safeguarding the interests of investors, while reminding all consultants of their responsibility to observe the rules governing the marketing and distribution of unit trusts and private retirement schemes. The misconducts were identified via FIMM's surveillance activities, disclosures from current or former distributors, and an investor report. Asia is back on top. The region's stock markets have beaten the US and Europe this year, credit markets are strong, currencies are strengthening, and investors expect the momentum to carry into 2026. In dollar terms, the MSCI Asia-Pacific Index of the region's equities is up 27% this year, including dividends. It's also the first time since 2020 that Asian shares have outpaced both US and European benchmarks in the same year. The resurgence reflects Asia's expanding appeal to investors seeking faster growth as the US and Europe slow. A weaker dollar has made Asian assets more attractive, while the region's deep links to the technologies shaping the global economy have strengthened the investment case. US companies have sold $1.7 trillion of investment-grade bonds in 2025, a near-record sum stoked by a rush of borrowing to fund AI infrastructure that has spurred concerns over a debt glut. This year's issuance, closing in on the $1.8 trillion issued in 2020 as businesses rushed to shore up their finances during the COVID-19 pandemic, has come as companies took advantage of relatively low borrowing costs to refinance their debt. But the debt sales, tracked by trade body FIMM through to the end of November, also reflect an AI borrowing boom, as big tech groups including Meta, Alphabet, Amazon, and Oracle tapped bond markets to fund data centers and the energy systems needed to power them. The global mutual fund assets market was valued at $568.3 billion in 2023 and is projected to reach approximately $1,171.3 billion by 2033, expanding at a CAGR of 7.5% during the forecast period from 2024 to 2033. Growth is supported by rising household investments, increasing preference for professionally managed funds, and wider access to mutual fund products through digital investment platforms. Digital platforms have significantly increased access to mutual fund investments. Online onboarding and paperless transactions simplify investing. Mobile applications provide portfolio visibility and tracking. Technology adoption improves investor participation. Automation is also widely adopted in fund operations. Tools support transaction processing, compliance, and reporting. Data systems improve fund management efficiency. Technology enhances transparency and scale. One key reason for adoption is portfolio diversification. Mutual funds invest across multiple securities and sectors. This reduces individual investment risk. Investors benefit from balanced exposure. Another reason is professional fund management. Investors rely on expertise to manage market volatility. Mutual funds provide structured investment strategies. This builds investor confidence. A relatively quiet session on Wall Street before Christmas saw stocks hitting all-time highs, with more signs the jobs market is not quickly deteriorating, supporting bets on a soft economic landing. Investors hoping for a Santa Claus rally, which typically encompasses the last 5 trading days of the year and the first 2 of the new one, saw the S&P 500 rising in a shortened session ahead of the holiday. Treasury yields edged lower. The dollar barely budged. The subdued action contrasts with the extreme turbulence driven by the tariff storm earlier in the year that put the equity benchmark on the brink of a bear market. Since then, stocks have surged, with every dip being bought at a record pace and the fear of missing out dominating sentiment. Read the latest issue of the e-Zine available at FIMM's official website to stay updated about what's going on in the industry.
This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.